Heya Cryptozens, tonight's show, UST Depegs, Instagram, NFTs, and Zuck bucks, SEC halts $62 million mining scam. It's 10 p.m. Pacific time. The date is May 8th, 2022. Happy Mother's Day to all you mothers out there, and welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. UST Depegs. And there's a lot of people watching this one, because events kicked off on Saturday that might be putting Terra's Bitcoin as a reserve idea to the test. Because, well, things have gotten dramatic. There are accusations of a coordinated attack, accusations of FUD. Terra USD, it was trading at 98.7 cents for a stablecoin. That's bad. Luna, they dropped 10% of their value in the last 24. And in order to understand what's going on here, first we need to talk about Luna. That's because Luna acts as a collateral asset for UST. Now, important to know that UST is an algorithmic stablecoin. So instead of having a dollar-for-dollar bank account matching the total of UST in circulation, it's Luna that keeps UST on their dollar peg. This ensures UST never gets too much or too little value. At least that's the theory. So what happens is when the price of UST climbs up above $1, that's bad. So Terra incentivizes people to burn Luna to mint UST. On the other hand, when the value of UST is too low, as happened when it lost its peg, at that point Terra incentivizes people to burn UST, reducing the amount of UST in circulation, and then use that to mint Luna. So you can see it, right? What's supposed to happen is that when UST supply is reduced, Luna's value should go down. When UST supply goes up, Luna's value goes up. Now on May 8th, UST's market contracted for the first time in a couple of months. Now that pushed the supply of Luna up over 436 million. Not an insignificant number. The market's been risky enough. This daily excessive supply could be what pushed Luna down and depegged UST. But that's not the only theory. Another theory looks at Anchor protocol. You see, Anchor is a lending market. It offers high yields to users who deposit UST. Well, a lot of that money got pulled out. Total UST deposits on Anchor fell from 14 billion to 11.2. In addition to that huge outflow, a lot of UST was taken out from the liquidity pools on Curve. Now, Curve is a DeFi protocol that lets users swap around between stable currencies, like UST. It was Terra Labs themselves that caused this one. Now, what they said was they made a withdrawal right as they were getting ready to shuffle money around between the different pools. They were moving $150 million around, and then they redeposited 100 million of it after they realized that UST had been trading at a discount. That's something that should never happen with a stablecoin. Now, some people are looking at one wallet in particular because it dumped a massive amount of UST. Over $285 million worth were dumped on Curve and Binance. So that's got some folks claiming it's a coordinated attack. Now, Curve is a decentralized exchange. They reported some massive UST selling. They said, quote, "Yesterday, someone started selling UST en masse, so it started to depeg. However, that was met with great resistance, so the peg was restored. Enough to get UST for that. And a lot of ETH and staked ETH were sold also." Now, about that great resistance. There's been speculation, of course. One wallet in particular seemed determined on defending UST's peg. In 10 minutes, they swapped out over $200 million in UST for Tether. That had the balancing effect on UST's curve pools. It rebalanced those. That, in turn, that bumped the price of UST. More swaps continued, boosting UST's value as it recovered its peg. Was this mysterious benefactor jump crypto? They've got strong ties to Terra, and they've done this kind of thing before. Last February, they spent $320 million to fix that exploit that was on Solana's wormhole bridge. At the time of writing, Luna is down 6.83%. It's trading at $63, almost $64 per. UST mostly recovered its peg. It's trading at 99.4 cents apiece. Let's take a quick look at the market. At the time of writing, the global crypto market cap is $1.57 trillion. That's down a whole lot from the $1.61 trillion of yesterday. It's down 3.3% in 24. The top 5 cryptos by market cap are Bitcoin down 3.77%, Ethereum down 4.31%, Tether, Binance Coin down 2.56%, in USDC. Instagram, NFTs, and Zuck. And for some lucky few US-based folks, you could have NFT support on Instagram. It's a new pilot project, and this could be available to you as quickly as tomorrow, because that's when this pilot is supposed to start. The pilot in this case is a test in displaying NFTs. And while Instagram is planning on supporting 4 blockchains, it's hard to say which ones will be available to testers during the pilot. It's expected that Instagram will support NFTs on the Ethereum, but also Polygon, Solana, and Flow blockchains. Now, between those 4, that really does capture the vast majority of the NFT market. Now, it is my understanding that Instagram is going to support your typical plug-in wallets like MetaMask. You plug your wallet in, you prove you own the NFT, and then you can show them off as your profile pic or tag the creator even if you want to. That's if they're on Instagram. They're not expected to charge for this whole NFT profile validation pic thing. Now, back in March, Meta's CEO, Mark Zuckerberg, had teased that this was coming, but with no real details. He was at South by Southwest, and he was talking to Damon John of Shark Tank, and he said Meta was, quote, working on bringing NFTs to Instagram in the near term. So, right now you've got Twitter. They're the only major social media platform that has integrated NFTs to any extent. Reddit, they had their NFT integration pilot recently too. But even more than those, I can see Instagram really just blowing up adoption numbers. 1 billion monthly users there to look at pictures. People are going to get curious, and they're going to get interested, and they're going to investigate this whole NFT thing on their own. On the other hand, it has been reported that once this pilot project is successfully completed, Meta is planning on following it up with minting and group membership options on Facebook. And they're also looking at something else, something called Zuck. At least that's the nickname. Because remember, they had a plan. Diem. Remember that? They were going to bring out a stablecoin, and it was not going to be backed by any one thing, but by, quote, a basket of assets. And I think that prospect scared the hell out of regulators, because that is a lot of power to be put in the hands of arguably one of the most powerful social media networks. And then they're going to act as a bank to people all across the world too. I think they got scared. And when they got scared, they started putting massive pressure on Facebook to stop the whole stablecoin Diem project. In any case, they scaled back their plan, and then they just dropped the plan altogether. And it looks like they still have plans for a virtual currency, but it's probably not going to be blockchain. It's probably going to be an in-app token. Stephanie Kesriel is the head of Meta's financial department. And she said, quote, "We're making changes to our product strategy and roadmap so we can prioritize on building for the metaverse and on what payments and financial services will look like in this digital world." So it looks like they're doing some kind of weird DAO-like thing. Okay, so Meta is going to create some sort of reputation token, and these tokens can be used as a reward for positive contributions. And they're also talking about adding another type called a creator token. And these would be awarded to like Instagram influencers, for example. So now with these coins, you've got a group of people who can reward behavior with tokens or withhold tokens to express their disapproval. And what this could do is get Meta out of the content moderation business and let the various Facebook communities police themselves using these tokens or some other as a method of motivation. And as a bit of a mini update, the intellectual property of the Diem payment network was sold to Silvergate Capital because they believe they can bring the project back to life. Speaking of NFTs, they're looking pretty good today. The global NFT market cap is up over 10.57 billion. It's about the same as yesterday. Sales volume is down 1.83% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are Other Deed, followed by Bored Apes, Mutant Apes, Clonex, and Beans. Now keep in mind, some of these collections have very volatile prices, so do your own research. SEC halts $62 million mining scam. Yep, and the Department of Justice indicted the CEO and the founder too. If he gets convicted, that could be 45 years in prison. On Friday, the U.S. Securities Exchange Commission announced they'd taken down a fraudulent crypto mining and trading operation. So these two guys, Luis Carlo Capucci Jr. and Emerson Souza Perez, they're the founders of MCC International. MCC standing for Mining Capital Coin. And they're in trouble. The charges are, quote, in connection with the unregistered offerings and fraudulent sales of investment plans called mining packages to thousands of investors. So, the SEC said that since at least January of 2018, quote, MCC, Capucci, and Pires sold mining packages to 65,535 investors worldwide and promised daily returns of 1% paid weekly for a period of up to 52 weeks. They said that they were able to promise these kinds of returns because they had this international network of crypto mining machines that could generate, quote, substantial profits and guaranteed returns. Now, they're supposed to be getting their daily returns in Bitcoin. That's not what happened, though. Instead, the defendants, quote, required investors to withdraw their investments in tokens called Capital Coin, which was MCC's own token. So basically, they made a Ponzi scheme. They recruited promoters and affiliates to promote MCC in a pyramid kind of fashion. And they also used foreign crypto exchanges to try to launder the funds. The Justice Department said, quote, Capucci is charged with conspiracy to commit wire fraud, conspiracy to commit securities fraud, and conspiracy to commit international money laundering. If convicted on all counts, he faces a maximum total penalty of 45 years in prison. No thanks. And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, like, comment, subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We're up to 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace